Hi, Gary. Hi, Sean. Okay, hopefully you guys can see the screen. So what I started, what I've got up on the board for Sean and Gary is I asked you to take out a piece of paper and turn it landscape, and then across the top, write out the accounting equation that we took a look at on um, Wednesday. And what you should have written out is, of course, assets equals liabilities plus owner's equity. Also, I'd like it if you could open your book to QS 1-11, Quick Study 1-11, because we're going to take a look at that. We're going to review the accounting equation. And then we're just going to start practicing putting transactions into this. We know, based upon what we studied on Wednesday, that we record transactions that are material and relevant and timely and authentic and all those attributes, and that we record them in compliance with the revenue recognition and the expense recognition principles. Okay, can anybody reiterate what the revenue recognition principle is? What does it mean? When do I record revenue? When I get money? Yes, I record my revenue when it's earned, not when I get the money. I record my expenses when they're incurred, not when I write the money. Like right now, I can guarantee most of you have incurred a smartphone bill for the month. Well, we're only on the 1st of September, so bad example, but you might not pay it until the 20th, right? But if you closed your books today, you would have to record on your books telephone expense or smartphone charges or whatever, right? Because you've incurred them, even though you don't pay them till later. Okay, now, next thing. So you've got a piece of paper out, you've written this across the top. Okay, do you need some paper? Everybody get out paper and pencil, please. This goes across the top. There's four components of owner's equity. Write them down and put little arrows as to whether they make equity go up or down. There were four things that are a part of owner's equity. What were those four things? And little arrows, do they make them get bigger, or does it make them get bigger or smaller? Try and pull that out of your head from what we did on Wednesday. If you have to look at your notes, that's okay. But I want you to make your own tool, which is the accounting equation that we're going to work on. Let me check in with these guys online and make sure. Sean and Gary, can you guys see the screen that we're working on? Can you see this?
Yes.
Oh, okay, great. And you can hear me, no problem.
Yeah, I can see it.
Okay,
Yeah, no.
cool. Okay, great. Okay, so we're not over here yet because we haven't really studied this, but the four things that you should have under equity, the heck, are capital / investment. And if you recall, capital and investment are synonymous terms. Withdrawals, revenues, and expenses. What does capital do to equity? You may put an investment in, it makes it go up. What do withdrawals do? I'm taking assets out of my own business, my equity goes down. When I earn revenue, what happens? Goes up. Incur expenses, goes down. What do revenues minus expenses equal? Net income or net loss? Okay, attention here in class, please. Put away all your small little items. Just focus on class. I got you for 50 minutes. So I put under here the names of some assets we're going to be using in this particular problem. Are these always the 5 assets? Cash, supplies, accounts receivable? No, it depends on the business. It's going to look different every time. If I got a trucking company, it's not going to look at all like a bakery or a hydrology shop, right? Your assets are different. But you're generally always going to have some sort of cash. Maybe, maybe not supplies, some sort of equipment. Maybe, maybe not. What's an accounts receivable again? Yeah, I've earned some revenue, but you haven't paid me yet. Anything with the word receivable is always a what? Asset. Okay. And then I've put the two types of liabilities, and you can go ahead and pencil these in so that your heading now looks like mine. You've got assets, and then you've got your 4 types of assets underneath: cash, supplies, equipment, and AR. Equal sign. What are my 2 types of liabilities? In this case, and again, may or may not look like this: accounts payable and notes payable. What's the difference between an accounts payable and a notes payable? Anyone have any idea? Accounts payable is just in your normal course of business. I get a utility bill and I got to pay it. I buy some inventory and I got to pay the invoice. A notes payable is when you actually write out a promissory note with interest, terms, 5 years, right? So when I borrow money for a car and get a note, that's a notes payable, and interest comes on that. Okay. Jesse? Accounts payable and notes payable. And then equity is always these 4 things. And again, you guys, owner, comma, capital is the name of the account. Owner, comma, withdrawals is the name of an account where you accumulate like-kind transactions. But really, this is where your investments go. And this is where anything you take out of your business goes. Not an expense, not part of running your business, but when you go into your business and take assets out of it. Okay, now let's turn to I just want to do this as a review. We're going to work with this. I want to turn to our quick study that I asked you to do for today. So pull your homework out. This is the first example of something I give you to do. There's no points for it, but if you don't do the homework, there's like 0 way you're going to get through the class. Okay, so quick study 1-11. I'm going to see for y'all online if I can pop over here and show the book so we can read this together and then do it. A lot of this technology stuff between so many different modalities is a little bit of a challenge. So let's see what we got here. Okay. Okay, so I am not seeing that I'm going to be able to do this. So does everybody have the ebook? Okay, I can work with you after class on that. Okay, so do you guys know how to get it? Okay, okay. So if you don't have it, then get next to a neighbor so that you can read the transactions with them. So please scoot in next to each other. For the 2 of you online, do you guys have this? Why the hell is that showing? Oh, no, so it is showing. I don't know. I'm bamboozled. Okay, we're going to go through the quick study. So the first one said, or what it said to do, was create a table similar to Exhibit 1-9. Then use additions and subtractions to show the dollar effect of each transaction on individual items. And we know that this thing has got to stay in balance because it's a mathematical equation. And they tell us very specifically how to set it up. There's never any mystery about what the top row looks like. Assets equals liabilities plus equity. Okay. The question is, what are the assets? What are the liabilities? In this example, there's only 4 assets: cash, supplies, equipment, and land. And there's 2 types, one type of liability, accounts payable. And then, of course, here's your capital, withdrawals, revenues, and expenses. Okay. Braden, can you read me the first transaction? Do you have the book up? Yep, and tell me what you thought. Yep. So how does that affect the equation? Yeah. Yeah. Is going to be in which of those 4 things? Capital, drawing, revenue, or expense? Yeah. So what you should see is a plus 15,000 under cash and a plus 15,000 under capital. And it's still in balance, right? Okay. Scott, can you read the second one for me? Okay. How does that impact this equation? Exactly. This is one of those where you've just traded one asset for another. My asset of cash went down by $500. I'm down here on the bottom. And my asset of supplies went up by $500. Is my equation still in balance? Sure. Okay. Natalia, C. Well, that's the problem. In mine, it's page 25, but that's a hard book. I think if you go over to that window pane on the left, it gives you like the quick studies, the exercises, the problems, and you can click on that, and then it'll take you to your section of the ebook. I'll choose somebody else while you're still bringing it up. In equipment, the owner invested $10,000 of equipment in the company. That means she brought a piece of equipment that she personally owned and gave it to her company. Okay, go ahead. So did the capital go down? It went up. What does capital do to equity again? Up or down? Makes it go up. Okay. They're balancing out after each transaction. So 15,000 minus 5 is 14,500, et cetera, et cetera. Third transaction, what just happened? 10,000 bucks of new equipment. It makes my capital go up. So now let's just together, how much cash do I have? 14,500. How much supplies do I have? 500. How much equipment? 10 grand. So what are my total assets right now? Okay, everybody take a sec, get out your phone so you get your calculator handy. What are my total assets right now? 25 grand is right. Okay. What's my liabilities? 0. What's my equity? 25,000. Is the math still in balance? Yes, it's always got to stay in balance. All right. Jesse, do you have the book up? Okay. Can you read me number D? Okay, great. Let me just reiterate that. The company purchased $200 of additional supplies on credit. What does that mean on credit? I'm going to pay you later. What's that an example of? A liability. What kind of liability? Accounts payable or notes payable? Accounts payable, because I didn't sign a formal note with terms and interest. I just said, send me an invoice and I'll pay you. Okay. Who had I called on? Oh, sorry. Okay. So what did you do to the equation? Yes. And specifically, which liability? Accounts payable. Right. And they're subtotaling after each transaction. So now it's like, how many assets do I have? 14.5. How many supplies? 700. You can do that if you think that's easier. Your choice. Okay. Let's see. Min, can you read E for me, please? Or go ahead, help her out, Carmen. Do you guys have it up? Okay. Just remind me of your name. Josie, of course. Do you have E up?
Yeah.
Can you read it for me? Yeah. So what'd you do? How does that fit into this transaction? Okay. That would be a true statement if I gave the land to my business. What did I do? Read it out loud again. Did I give them the land? No. Give it a shot. So I agree that the cash went down by $9,000 because I wrote a check. What do you think? Help her out, anybody? It's another example of trading one asset for another. I wrote a check and I got title to a piece of land. So my land, after the land went up by $9,000. Does everybody see the difference between that transaction and giving something to your business out of your own pocket? You want to ask a question? So at the end of the day, here is the result of my transactions. And you would need to do this and make sure that that all equals. I'm going to save it all time it does. This is called, by the way, a balance sheet. And it's one of our 3 required financial statements. Assets equals liability plus equity. Okay. Now we're just going to keep doing this. We need to just keep doing this and doing this and doing this until you totally get this. And then we're going to take these to financial statements because obviously you're not going to walk into a board meeting and give this to your management team. You need to give them something that concisely shows how your business is. Okay, but this is the gut of it. All right, so everybody take out that piece of paper you just did. That's your tool. And I'm going to hand out a lab. And this is what we're going to work on together. If you don't have the book, or don't know how to get the book, or don't know how to get on Connect, you, oh good, okay. Have you gone on that, have you gone on the, it's included in your feed. Going to the game this week. Ferris or Barrel or something. Oh. Yeah. Okay, so everyone's got one of these now. Oh, okay, so we got 25 minutes to crank through this. Take out your piece of paper that's got the assets equals liabilities equals equity. This is a set of transactions that happened in Joan's law service. She opened her law office on July 1st. Okay, for those of you online, I think, both Gary and Sean, I gave you lab number 1 to take with you. If you don't have that in front of you, hard copy, it is, oh God, this is just a trip trying to get through all this up here. If you go to the Moodle shell, under additional stuff I posted is the name of the topic, you will see lab number 1. Let's see if I can get back here. Oh, I'm going to have to go all the way back in. Oh, no, here it is. Additional items to share. And it's right here, lab unit 1. Okay. So we are going to roll through this as a group and fill out, and you've got to take your own pencil to paper. It is critical. You will not pass this class if you don't do that. I can just guarantee you. Okay. I've been doing this for a lot of years. Okay. Number 1, Joan, where am I? Joan opened or invested $11,000 in her practice on the 1st of July. You are going to write down on your table how that impacts it, just like we just practiced. What does that first transaction do to the table? Does it impact any assets? Does it impact any liabilities? Does it impact any equity? You need the piece of paper that we just wrote assets equals liabilities plus equity on. And then we got the subsets, right? Cash, equipment, what else? Supplies, AR. I call it accounts receivable AR, by the way. And use pencil. Anybody need a pencil? Yeah, you always use pencil, write pencil. Take a note to yourself, send yourself an email, whatever, right? You use that pencil and erase your pencil. Pens, not so much. Okay. So honestly, you guys, this is always the first transaction. If you're starting a business, you can't really start a business so you have some cash to put into it or some assets, right? So first transaction, super straightforward. Too much stuff up. And this is somebody else. So let me get this out of the way. Okay. So what happened? I put in $11,000 of cash. And I've got $11,000 of the owner's equity. I'm not going to take the time to subtotal every time, but you certainly can do that. All right, let's just go around. Braden, you've already had a chance. Chris, can you read? And if I go too fast, just stop me. Yeah. Anytime you put an asset into the business, I'm taking my own, a phone that I paid whatever for, $600, and I'm like, this is no longer my personal phone. I'm giving it to my business. I would now have a piece of equipment in my business and I would have increased my capital, my investment. If I took money out of my business and bought this phone, is that the same? No, because I was using cash that was in my business to spend. Okay, Chris, can you read the second one, please? Okay, you haven't seen this one before. We're gonna do it together. I paid $800 for July rent on my office space. First question, did that impact an asset? Which one? Yeah. Very good. Now, don't forget to put a minus by something if it went down. Okay, so you know that part of it. Did it impact any liabilities? Do I owe anybody money? No. No. Was it an investment or a withdrawal? No. It was an expense. But now here's the insane part. What do expenses do to equity? They make that it go down. So don't forget to put a negative sign over under the equity and the expenses. And you would know that something was up if that wasn't how it rolled, because you know you've always got to keep the equation in balance. Yeah? Okay. Cody, can you read the third one? Okay, now you've got something you maybe have never really seen this term before. So let's spend a minute and talk about this. I purchased office equipment on account. What does that mean? I've got to pay it later. It was just like the supplies on account, but now I'm buying a piece of equipment on account. I did not write out a check for it today. They will send me an invoice and I will pay them later. I'll give you a minute to look at your chart and decide what you think happened. If you're sitting next to somebody, you can work together. We're all learning this together. And try and figure out how this impacts your accounting equation. Make sure that your equation stays in balance when you're done putting it in. And let's just practice using our plus and minus signs on everything at this point, so we know if it's making the account go up or down. Cody, what do you think? Did I write a check? Okay, I just want to repeat this for the benefit of those folks online. We purchased office equipment on account. So did it impact cash? No. Okay, take another shot.
Would it be accounts payable?
It is. Oh, sorry. I forget to ask you guys online. Yes, it absolutely is. It's the voice from my computer. Accounts payable. It is, in fact. So let's start over here. Did it impact any assets? Which one? That's not an asset. Go ahead. Which asset did it impact? Equipment. How much was it again? And what happened to my liability of accounts payable? Did it go up or down? Up. I owe more money now, don't I? Okay, bear with me here. When a payable goes up, that means I owe more money. When a payable goes down, I owe less money. What just happened? Do I owe more or less money? Oh. I can't get plus signs to show up. I can only get minuses to show up. So you're assuming, but on yours, I want to see the little pluses. So you've always got to have, there's always got to be at least 2 entries on every line. Otherwise, you can't keep the equation balanced. Okay, great job. Okay, Quincy, read number 4 for me, please.
Provided the legal services to clients or cash.
1,500, yeah. Okay, this is what I do. I'm an attorney. You came to me and I'm like, okay, sure, I'll work for you. Give me 1,500 bucks. What is that? Think about it. You can talk amongst yourselves. This is what I do for my business. It's how I earn my revenue. And in this particular situation, I got the cash right away. Look at your accounting equation. I'll pull up one of you guys online. Sean, what do you think happened to the accounting equation from this transaction? Do you think that any cash was impacted? Are you there? This is my favorite part about teaching online. Gary, are you there? Yeah, well,
Yes, I'm here. Sorry, it wasn't a meeting. I believe it adds 1,500 to cash.
it does. I got paid $1,500 in cash. What else? Did. So Gary, I'm still
Yeah.
tapped into you. Did it
No,
impact
no,
any other?
yeah, I'm trying to think. Sorry, it's hard to move the computer around. It expanded the screen and I had to.
Oh, yeah, sorry.
Owner capital. I feel like it goes into like, wouldn't it be like revenue, like some
It
kind
would
of?
be so much like revenue that it
Okay.
is revenue.
Okay, that's what I'm thinking. Sorry.
This is, it's okay.
I've had
This
to
is
get up
what
from
I
the computer
do.
and go to my kids like 3 times, so I'm really just trying to stay with it.
Okay, all right, cool. No, I don't need to call on you.
No,
I
you're
just
good.
don't want to, I
They're
just
good
don't
now.
want to
It just
not
in
call
the
on you.
beginning I was struggling to follow. So you're good.
Okay, are you with us now?
Yes, and I just want to. We're gonna end up catching up in your office hours at some point, so it's all
Okay.
good. Don't worry about it.
All right, no worries. Okay, what would be another option if I had earned that revenue and they hadn't paid me yet? Exactly. I would have had an accounts receivable. So instead of having cash, I would have had this thing called an accounts receivable, which means my client was going to do what? Pay me later. A receivable is always a what? Asset. Anything with the word receivable in it. Anything with the word payable in it is a liability. That didn't happen in this situation, but I'm just doing that for illustration. Okay. Natalia, can you read for us the next one? Okay, So what does that physically mean? I borrowed $700 on a note from a bank. I went into my bank and I'm like, I want to sign a formal piece of paper that says I owe you $700 and I'm going to pay you 6% interest on it. And it's going to take me a year to pay it off. Okay. Actual physical piece of paper. Is that an accounts payable or a notes payable? It's a notes payable. You can work together, look at your accounting equation. I just came home from the bank with $700 and I signed a note. How does that impact my equation?
Does it count as an expense?
It's not an expense. An expense is something you incur to earn revenue. I haven't incurred anything. I've borrowed cash and signed a note.
So it increases your cash.
Yes, it does. Okay, what do you think, Natalia? Yes, ma'am. Look at that. My assets went up by $700, as did my liabilities. Excellent. Stop me if this is not, if you're like, what the heck? All right, Jacob, read number 6 for me, please. Are you Jacob?
No.
Hunter, sorry, no wonder you're like, I don't know. Why is she looking at me? That's not my name. Okay, number 6, please. Have we seen this before? You're gonna hopefully see this 100 times a month. Perform services, perform services, perform services. Sometimes you're going to get cash. Sometimes it's on account. You know what to do with this one. Put it on your piece of paper. Performed legal services for client on account. This should be one that's hopefully super redundant. What did you do with that one, Hunter? Did I get cash? And how here, and I put it in red because that's really important. It's super easy to miss. On account always means a payable or a receivable. No cash changed hands. Way to help your neighbor. Yes, it is in fact. And I'm going to just call that AR, accounts receivable. My AR went up. And what else was impacted? Still looking at you. And I know your name now. What did I do? That's what I do. I'm an attorney. I provided my services. Of what am I doing? I'm earning. Whatever it is you do for a living, that's earning revenue. I'm earning revenue right now against teaching you. That's how I earn revenue. What was the number again? 600? Oh, 2000. Oh, the number transaction. Okay, right. So my AR went up. And I earned revenue. One more time, I record revenue when it's earned, not when the cash trades hands. Does that make sense to you now? I record expenses when they're incurred, not when the cash changes it. When I say something and then stop, that is your cue to continue the sentence. You guys don't look at you like, what is this? Okay. Okay. Carmine, please read number 7. Okay, wow, a lot happened here. I'm paying my monthly bills. I'm paying my salaries and wages. I'm paying some utilities. And I'm purchasing some supplies. How much cash was out of hand on this transaction in total, if any? $900. So that's one thing, I'm just giving you some hints here. This is going to impact a lot of different parts of your accounting equation. I've written some checks. So in total, I'm out cash. I've also bought a small asset. And I've also incurred something. This is your trickiest one to date. You're going to have 3 entries on your accounting equation, but it needs to stay in balance. It's just math. Make sure to put your plus and minus signs if you need to. Okay, moment of truth. Now we can all do this together. And I'm just going to go through every single thing. So did something happen to this? Anything happen to cash? What happened to cash? Everyone get that? Were supplies, equipment, or AR impacted? That's what happened. Yeah, my supply 100. My supplies went up by $100. That's an asset. Oh, you don't have a supplies? Okay, no, that's not okay. I would just pencil in supplies over here. Now, let me say this while, okay, so for you guys online, the question was, oh gosh, my piece of paper doesn't have supplies on it. There's nothing magic about adding new assets or liabilities or revenue accounts or expense accounts. You add them as you need them. And now we need a supplies account, so just pencil her in. What's important is that it goes in the correct spot. Right? It doesn't belong under liabilities. It's an asset because I own it. Okay. So, supplies up or down? Okay. Now let's stop here. What has happened in total to my assets? All of my assets so far, just from this transaction. Go ahead. Oh, thank you. What has happened to my assets from this transaction so far? No, have they? Look at the numbers. I've got a minus 900 in cash and a plus 100 in supplies. So what's happened to my assets so far? They've gone down $800, right?
Yeah, I wrote
That's cool. If you wanted to do 3 transactions here, that's fine. But it's not balancing yet, is it? What am I missing? Anybody? I have 2 expenses, don't I have? Salaries and wages, and what was it, utilities? And I am going to break those out, minus 500 and minus 300. Because expenses make my equity go down. By nature, the definition of an expense is using something up to earn revenue. Okay, so this is a great question. Natalia asked why am I treating supplies differently from salaries and wages and utilities? Can anybody speculate why that's different? Supplies are an asset. I own them. It's like, here's my supplies. I will be honest, in this day and age, supplies are not a big deal in most companies because everything's digital. And so all that kind of stuff is now under equipment, right? Printers and servers and data farms and, blah, blah, blah. We don't have like the old fashioned supply closet so much anymore. You do, but you see what I'm saying? But they treat it like it's still a big deal. So that's the difference. Okay, one more. And then I'm going to tell you what you have to do over the weekend. Okay. Joan withdraws $1,000 for personal use. Matthew, I don't think I've called on you yet. She goes into her own business, is like, I need $1,000. Take a second to put it on your little chart. What did she do?
Minus 1,000 for cash assets, and then minus 1,000 for withdrawal.
Excellent. This that we did today is called a tabular summary. You will never see this again once we get past this chapter. We will learn how to transfer this into debits and credits and journals and ledgers and financial statements. And this will look hilariously unsophisticated even in a couple of weeks. But you have to understand how this works and that you've always got to keep the accounting equation in balance, because if you don't, it's kind of always lost. Okay. Labor Day is Monday. Started in 1882 by labor activists. Somebody that works. He stopped or something. So I won't see you until next Wednesday. So here's what I'd like you to do for Wednesday, which is kind of a long ways away. Tally this up and prove that it ties. In other words, at the end of the day, how much cash do I have? How much AR do I have? How much supplies do I have? And prove that your accounting equation balances. Number one. The second thing is on that that side panel on your book, right? So you've got all your topics, and then it says QS, and then it says exercises, and then it says something like problem set A, and then it says problem set B. What you did today was a quick study, that 1-11. If you haven't done that, do it. You have to go through this over and over. For Wednesday, I would like you to do exercise 1-7 which revisits those principles and assumptions we talked about. And then 1-15 is another one of these. The last thing that you have to have prepared for Wednesday, and again, I can't really give you page numbers because our pages aren't the same, but there is a topical area called financial statements. Well, I mean, you need to read all of them, obviously. But under financial statements, when you come in on Wednesday, you should be prepared to have like a little short 5-point quiz on the different types of financial statements. What are they? There's 3 of them. Balance sheet, income statement, and statement of cash flows. And you will read about those between now and Wednesday and do those 2 exercises. Also, your first Connect homework is due before I see you again. Your reading place for chapter 1. Did everybody catch that? On your syllabus, remember we went through that at the end. I got all your due dates lined up. And your reading quiz for chapter 1 is due on September 5th. So that's before I see you. That's Tuesday, right? All right. Everyone understand what's expected of them by next week? With that said, have a great 3-day weekend. You got your book, Helen? You got your book. Everybody feel confident and find all this? Do you, the computer, or how are you accessing the book?
I'm buying.
Well, we need a plan with you now. Like, we need a plan. No. So do you want to be sure how to get on the book on your phone? Sure, there, it's right here, so in your book, under financial statements. And they're lined out right here. Income statement, statement of owner's equity, balance sheet, and statement of cash flow. And you'll read about them in here.
For the very one, I don't understand why you must put that up.
Because she gave her business 11 things.
Oh, all right.
She literally took it out of her bank account right here.
That makes sense.
Hi, you're the person with the sharing of finance class. In the web shop, I noticed there's a link for the online book, which I got, and there's also a link for Connect. Is there anything you can process yet, or no? Okay.
Oh, that's good.
Yeah, everything else is there. Is this kind of confusing me?
Oh, no, there is no Connect for finance. I'll have to go, I'll make a announcement.
Okay.
I don't know, I'd say.
Yeah. Okay. I was confused about that.
Yeah, well, I would be too. Yeah, we're not using it.
Thank you.
Thank you.